Good morning. Good morning. Welcome, everybody. We know that you have a busy day ahead of you, and so we want to try and be on time. This will be a very brief update, but we want to update you. It's been a while since Sean and I have presented a webinar for you, and we needed that much needed time to finish a lot of tax returns and to learn a lot more about all the new rules and clarifications we got during our busy season. So welcome to the Provider Relief Fund, how to keep the money. I just want to let you know that this is being recorded and that we are doing everything we possibly can to make sure that we're giving you the most up-to-date information. Things change quickly, and we always recommend that you speak with your tax advisor before implementing anything that we recommend here. So I am David Goodman, and I am the Managing Director of LB Goodman and Company. And I'm joined today by Sean Brahini, one of the principals in our office, and another expert on healthcare for dentists and the rules and taxes surrounding them. So Sean, why don't you say good morning, check in, let us know how you're doing.
Morning, everyone. Happy to be here, ready to give some updates.
All right, so Sean will be sharing with us about the rule changes that came out from the Provider Relief Fund. But before we do that, I just want to let you know that there are some important things we want to share with you about the employee retention credit. So let's talk about today's topics. First of all, we're going to be going over a little bit of the employee retention credit because we're seeing that a lot of people still are not taking advantage of this. And its interaction with the PPP. We're going to do an update on the Provider Relief Fund reporting. We're going to talk about the interaction of the PPP with the PRF. And we're also going to give you a brief update on our position right now regarding PPP Second Draw forgiveness. So let's get started quickly. We're going to talk about the employee retention credits, and we're telling you not to wait. Apply for this as soon as you can. So let's go through the basics, first of all, of the employee retention credit. First of all, it provides employers with a refundable tax credit of up to 50% of qualified wages paid between March 13th, 2020 and 12/31/2020. The maximum credit is 50% of wages for 2020 up to $10,000 an employee. So that means that each employee is worth a $5,000 tax credit. The qualifications are, and most dentists qualify, is that you had to have been closed by government order, limited in services provided by government order, or you had a 50% or more reduction in revenue during one quarter of 2020 compared to 2019. So almost every dental practice that we work with has experienced that 50% reduction in the second quarter of 2020 compared to 2019. And if you're in New York, dentists in New York were closed by government order. So even if you don't qualify for the 50% reduction, being closed by government order will still qualify you for the employee retention credit. It continues each quarter until at least 80% of the prior year's quarter revenue is achieved. So that means that you're automatically eligible for the second quarter if you meet the criteria, and you will be automatically eligible for the third quarter. So it's quite possible that if you don't have employees who are making $10,000 in the second quarter, that you can make up for that difference in the third quarter. And I'm going to give you an example here of how that looks. But I just want to make sure that you understand that any credit you receive will reduce the expenses on your practice. So that means if you get a $10,000 credit, you're going to have to reduce the expenses on your practice by $10,000. It's going to give you a little bit more income, but the net result is still you're going to be plus major dollars. So let's just take a look real quick at an example. A practice has 3 full-time employees. They're not related to the practice owner, because if you are related to the practice owner, you are not eligible right now for the employee retention credit. We're still waiting for guidance on this, but we don't think that they're going to allow the owner or owner's family members for being eligible for the employee retention credit. So employee A earns $10,000 a quarter, employee B earns $8,000 a quarter, and employee C earns $12,500. So revenue in the second quarter of 2020 was down by 55% compared to the second quarter. They qualify. The employee retention credit for Q2 would be $5,000 for A, 50%. It would be $4,000 for B, 50%, and $5,000 for C, because it's up to $10,000 in wages. In the third quarter, B is eligible for $1,000 of credit because they already used up their wages of $8,000. So now the remaining $2,000 of wages paid in the third quarter gets a 50% credit or $1,000. But this is $15,000 in tax credits. That's for 3 employees. In the third quarter, the practice restores 81% of revenue in Q3 compared to the third quarter of 2019. The practice is no longer eligible for the employee retention credit in the fourth quarter of the year. So I just want you to see that this is how it works. It can be pretty substantial. Think about the number of employees that you have in your practice and what the credit could be for you. Here's some planning opportunities for you. It's very important. A minimum of 60% of the PPP loan forgiveness must be for payroll and employer-paid employee benefits, like if you pay for health insurance or you make a retirement plan contribution match for your employees. The remaining 40% can be used towards rent, utility, and other lease payments. This will allow for 40% of wages to be used towards maximizing the ERC, because you can't use the same money for PPP as you can for ERC. So we want to carve out as much payroll as we can towards the employee retention credit. And this is one of the ways that you can do this. You will need to review your specific scenario. Everybody's going to be different. And again, we recommend consulting with your tax advisors before making any decisions. We can help. We have been studying this. We have been learning this. We've created this incredible calculation schedule that not only provides the information that you need, that we need to calculate the credit, but also the information that you need to give to your payroll company, where the employee retention credit is applied for through your Form 941, which is your federal payroll tax reporting. So we're offering 3 levels of service for you. We can do the employee retention credit calculation. We can do the PPP first draw forgiveness application, or we can do both for you. So here's the link that you can sign up for this. You can also go to our website. That's lbg.cpa. And you'll find in the top of the landing page a box that says PPP ERC. You can click on that, and there will be the information as well. So I hope that you will take advantage of this credit and allow us to help you calculate the maximum amount. Just to let you know, the employee retention credit has been extended through the entire 2021 tax year, and the credit has also changed. The credit is now 70% of employee wages paid per quarter instead of per employee. 70%. So that means an employee who made $10,000 in Q1 is a $7,000 tax credit if you qualify. And then again, if you qualify in Q2, which you automatically do if you qualified in Q1, that's another $7,000 tax. So that's $14,000, and that's just for one employee. And that can continue throughout the year. You have to have at least a 20% reduction in revenue in 2021 compared to the same quarter in 2019. So now we're not looking at a 50% reduction. We're only looking at a 20% reduction, but the credit is much richer. And it ends again in the quarter when at least 80% of 2019 revenue has been restored. So again, you're eligible in the first quarter. You'll automatically eligible in the second quarter, but if in the second quarter you've restored at least 80% of the prior year, then you will no longer be eligible for the third quarter. So I know this is what you came for. This is what Sean has been reading, all 59 pages of guidance that we got from HHS. And he's ready to share with you what we learned so that you guys can take advantage of making sure that you get to keep the money that you got from the PRF. Sean, you're up.
All righty. Good morning, everyone. Thanks for joining us, David. Thank you. As you all know, hopefully know, we've received some updates on the Provider Relief Fund. First, what I want to do is go through some updates on the deadlines, the reporting windows, because these are going to be very important to remember. As you can see, we're going to discuss the different periods or phases as you.
I forgot to tell you all that Sean has been having problems with his internet connection. Hopefully we don't lose him, but
The first one.
Sean, we're losing you, but we love technology and how it works. But Sean is going through the schedule here. You can see the due dates for reporting. If you received more than $10,000 in any one of these 4 periods, then what's going to happen is that you have a deadline to use the fund, and then you have a reporting time period. So we're coming up right now on that June 30th, 2021 deadline. So between April 10th and June 30th, you have to spend the funds that you received, and you have to report them between July 1st and September 30th. So we did lose Sean, but he'll come back and share with you more. So I just wanted you to get an idea. Sean, you're back? Almost? There you are.
All right.
Okay,
Sorry.
so I've been talking through the deadlines. I just went through the first reporting period because we missed all of whatever you wanted to share, which I know is important. So hopefully there's any other highlights, or we can move on to the next slide.
Exactly. Yeah. So the most important thing to remember here is going to be that first phase, because obviously that's coming up very soon. That reporting window is starting shortly, and it's only going to last 3 months. So if you received any funds over that $10,000 threshold within that time period, please keep it in mind, because it's going to be very important to stick within that deadline. All right. Timing of that reporting. So recipients are going to be required to report in each of those payment period received in which they received 1 or more payments. It could have been more than one, that totaled, or in the aggregate, $10,000 at least. Now, this reporting needs to be completed and submitted by the last date of the reporting windows that we just discussed. Please keep this in mind. Any recipients that do not report on this within those reporting windows, they're going to be considered out of compliance with the payment terms and conditions that they agreed to when they took the funds, and those funds may be.
All right, so Sean is sharing with us that you have to make sure you spend the money, because if not, the government's going to take it back. So make sure, really important, that you report on time.
Please note, now, because of the straightforward nature of these calculations.
And so Sean is sharing with you now that these are straightforward calculations. There's nothing here that needs to be done that's fancy. So we're not going to be providing any assistance with the reporting, but like we are with the ERC and the PPP. However, if you have questions, we're certainly here to answer them. And speaking of questions, I forgot to mention before, but you can submit any questions you have during the presentation to the Q&A. We're going to try and answer as many as we can at the end of the presentation. So Sean, welcome back. I'm going to move on to the next slide.
Thank you. All right, so now that we talked about deadlines, we want to talk about reporting on the use of these funds. So you want to report this in the order you see here. First, we want to report on any interest that's earned on the funds you receive. Other than that, you want to report on any other assistance that you received in addition to these funds. That could include any other coronavirus aid. This includes the PPP, any local or state assistance, any business insurance claims, or any other type of coronavirus-related assistance. Now, reimbursement of lost revenues. There are 3 methods that can be used to calculate this. First, you have option 1. That's going to be the difference between the actual patient care revenues. Option 2 is going to be the difference between your budgeted and actual patient care revenues. Option 3, you can use any reasonable method of estimated revenues. Just when you complete your reporting, you're going to need to provide the detail on that calculation. All right. Now we want to talk about the use of general and other targeted distribution payments. They must be those that are either unreimbursed by other sources and that other sources are not obligated to reimburse. The reporting requirements are going to be dictated by the aggregate payments received in any one of those funding windows. So we have two different levels here. Now, if you received anything between $10,000 and $500,000, you're going to be required to report those expenses within two general categories. You're going to have your general administrative expenses as well as your healthcare related expenses. Now, if you receive over $500,000 in payments, that detail level goes up a little bit. Now, those general and administrative expenses are going to need broken down a little further than that. For example, you have to report your mortgage or your rent paid, any insurance paid, personnel, payroll, items such as that. All right. Reimbursement of lost revenues. Reporting entities using these payments will need to provide the following information. First, generally any information that's used to calculate the lost revenues that are attributable to coronavirus. Now, it's going to depend on what option you chose to calculate this. So first, any revenues or net charges from patient care. Now, this is prior to netting against any expenses need to be reported by payer mix. If you chose calculation option 1, you will need to provide actual figures. If you chose calculation option number 2, you're going to need to provide budgeted and actual figures. All right, there's some other reporting requirements here that you need to keep in mind. You'll need to provide some personnel metrics. That's going to have to do with the total number of clinical, non-clinical staff that you have in the office, any patient metrics, your general patient mix, depending on your particular practice, your hygiene patients, emergency patients, and so on. You'll need to report on your facility metrics, and then each recipient, each reporting entity is going to need to complete a survey. Now, what that's going to do is you're going to need to answer questions regarding impact of payments on the overall operations of the practice, maintenance of solvency, the ability to avoid bankruptcy, keep the practice running, retention of your staff, as well as the impact on your business or patient service.
So Sean, these are just survey questions that the government is asking, right? These are kind of like different than really the reporting for the PRF. They're just trying to collect data, and this is their way of doing it because they know everybody has to apply for PRF. Is that how you're thinking about this?
Exactly. It really has nothing to do with the use of the money. Like you said, it's an opportunity to collect information, and they're gonna take it. All right. So as David mentioned earlier on, the PRF does interact with the PPP, and here's how. So first, any PPP funds received, these need to be considered when you're determining the lost revenue when you're calculating and reporting for the PRF funds received. Now, within the guidance we've seen so far, and this is up through last week, the definition of revenue for the PRF purposes includes any PPP funds received. Now, obviously, this is going to significantly reduce available revenue losses for some providers. That's going to make it a little more difficult to claim these payments. Now, on the other end, if you're choosing to allocate your PRF payments received towards related expenses, these funds received, such as the PPP, need to be netted against those. So that's very important to remember as well.
So Sean, that means that if I spent my PPP money on payroll, and so the PRF reporting says I can use some of my payroll towards the requirements of using the PRF appropriately, I have to reduce those salaries by the amount of PPP that I use towards that before I then say this is how I spent my PRF funds.
That's correct. If you choose that method of applying the PRF funds, that's exactly what you have to do. You have to net those expenses with any anything that reimbursed those expenses previously, and that would include your PPP. So that may come with an additional planning opportunity. There's going to be other sort of expenses you can apply this towards. A big one, especially for anyone on this call, is going to be the healthcare related expenses, because those are going to be very large. So that's, again, another planning opportunity you would want to speak with your tax advisor about.
So you've covered a lot on the PRF. You've kind of narrowed down the 59 pages of guidance to about 5 or 6 slides. There's a lot of detail in them. There are a lot of expenses that you should be looking at, because it's very clear from the guidance that we received what expenses are eligible. And so now you see how the PPP interacts with the ERC, how the PPP interacts with the PRF, and now we're talking about our PPP second draw. And so I want to let you know that there are no longer any funds available for the PPP second draw. They ran out well in advance of the deadline for application. It seems like this second round of funding for many incentives that the government came out of were very much under budgeted. And so there were a lot of businesses that lost out on opportunities for additional resources from the government. At this point, those of you who did receive a PPP second draw, we are not recommending filing for forgiveness. If you remember, when the first PPP loans came out, we said, don't apply for forgiveness, don't apply for forgiveness, don't apply for forgiveness. Things are going to change, and they did. And they did significantly as we went through the process in terms of the limits for applying, what the requirements were for applying, and even the forms to apply for forgiveness. We're going to have to wait and see what happens with the PPP second draw. And if you remember, with the PRF funds, initially there was supposed to be a reporting for the end of December that was going to be due by February 15th. Many of you probably went online and applied at the portal, waiting for you to be invited to then submit. And all of a sudden, June came around, and now they decided, okay, here's how we're going to report this. The PRF is going to be pretty straightforward. Follow the deadlines, and understand that there's really not a penalty that we're aware of right now. If you did your best to comply, you have excess money, the government's just going to ask you to send it back. Oh, and if you do realize you have excess money, and how do you send it back? They haven't told us yet. But they do say that there will be a methodology for you to return funds. So we're still waiting for guidance on that. More to come. So follow our emails and our Facebook. So all our social media will be sharing things continuously as they are made aware to us. So I want to thank you so much for being here. I know that you need to get back to your day, but I do have some questions that came in. And so I just want to answer those. So the first question we got was related to the very beginning. Somebody asked, if you've already applied for PPP forgiveness, can you still apply for the employee retention credit? And the answer is yes. That we've gotten some relief from the SBA, the IRS, about applying for the employee retention credit. And it does say that even though you applied for forgiveness, we can still allocate that 60-40%, even if you receive forgiveness. So don't give up on the employee retention credit if you've already applied for the forgiveness. And then we received another question regarding the PRF funds. What if, Sean, and I think this will be great for you, is what do I do if I have multiple locations for PRF reporting, and those locations all received some sort of PRF funding directly? How does that work, Sean?
So the reporting requirements, you got to break this down 2 ways. So by default, they want it by reporting entity, but for this situation specifically, if you have related parties, they do not want you reporting for each individual entity the PRF funds received. So if you have a bunch of related entities such as this, everything needs to be reported by the parent company on behalf of those subsidiaries. So it makes reporting a little bit more simple.
Yeah, that's I think something nice that they did for the healthcare professionals. So I want to thank you all for being here today. You can see the information, how to contact Sean or myself via email if you have any questions about what we shared today. Things still keep moving. We're waiting now to hear about what our tax laws can look like for 2022 and beyond, and maybe even some might go into effect in 2021. We don't know, but just keep following us, keep joining our webinars, and we'll keep sharing with you the relevant information. So have a great day, and thanks for joining.